What is going on, everyone? My name is Kenneth Beard here with Stock Indices, where I go over economic data reports and I go over my technical analysis on the overall market to give you guys informative information to make those money-making trades. So, today's Thursday. I hope you guys are having a good morning today, making the right decisions when it comes to placing these trades in the stock market. And I'm just going to go ahead and jump right into the economic data reports. The first thing we have today is initial jobless claims coming previously at 296,000, was expected to be around 300,000, but came in at 290,000. So we're missing on that number, which is actually decent, when it comes to the initial jobless claims and the continuous jobless claims. We usually like to see that number decrease, indicating that more people are going back to work, putting the economy back in a healthy state. So we got 2.6 million for the continuous jobless claims, dropping that number down to 2.48 million for the uh, for the numbers that are coming in right now. So we're seeing that number drop. The Philadelphia Fed Manufacturing Index came from 30.7, dropping down to 23.8 for that. So essentially what the Philadelphia Fed Manufacturing Index is showing us is it is showing us the rate of manufacturing business, and I'm guessing the state of Philadelphia. So when we're seeing that number drop from 30.7 down to 23.8, we're seeing that we're getting a little less output for the manufacturing businesses in Philadelphia. So where you can see that number dropping for whatever reason, it may be due to economy issues, inflation issues, for whatever reason that number is dropping, so that can have an impact in the market. So the next one we're seeing is existing home sales coming from 5.8 million. It was expected to run up to 6.10 million. We beat those numbers to 6.29 million, showing extreme growth for existing home sales. So homes that have been existing, homes that have already been built, are seeing higher than expected sales in the U.S. economy, which is good to see, showing us that in that aspect of the economic market that we're seeing growth. In some aspect, we're seeing growth in home sales. So good for that indicator. For leading economic indicators, we got it coming in previously at 0.8%, was expected to drop to 0.4%, but we're dropping to 0.2%. So what that is indicating to us, it's indicating to us that, okay, leading economic indicators, the growth of the overall market is slowing down rapidly at this point compared to previously. Previously, we were at 0.8% for the leading economic indicators. So, kind of putting all the economic data into perspective as a whole, all of those numbers are seeming to be decreasing quite a bit. So, is the economy slowing down? Is, inflation the main impact? For whatever reason though, we're seeing a slower growth in the overall economy, which is why we have that leading economic indicator number dropping from 0.8% all the way down to 0.2%. So you got to keep your eyes open when you're looking at equities, when you're looking at bonds and things of that nature. Keep your eyes open because it can indicate this economic indicator here could maybe show us something that we don't see coming up in the future. So that's all I got for economic indicators. Let's go ahead and jump straight into these charts. First thing I'm going to be looking at is these E-mini S&P 500 futures. Okay. Okay, I done put three different studies on. I'm just trying to find the right one. I don't know. I usually have okay, whatever. Okay, so, all right. So today we got another green day for the S&P 500, but you can kind of see how the market is topping right here at that valuary high and at that overhead resistance level. So like I said, the valuary high for the overall market, which is the S&P 500, is starting to now show its true colors here when it comes to affecting price action. And so we've gotten up to this high level here, but now we're seeing a little bit of weakness. Continuing downwards volume. Volume is decreasing very heavily, and it's not, you know, increasing the volume. The volume on this uptrend is just decreasing and being sucked away, which is leading me to believe that, okay, we're getting this suction away from the trend. We're getting this suction of volume away from the trend. You know, it's only a matter of time before we get a pullback of some sort. So, you know, depending on how big the pullback is, I know that I went over that the other day, and I think maybe it's on SPY. Yeah, it's on SPY here where I was showing you all where this could potentially pull back to if it does pull back. And so let's go to the 4-hour chart. You know, what I was saying was that since it's up here at the valuary high level, I put a fib on and it's showing me that, okay, what I'm searching for here is where the most volume is on price. So where the second most volume is on price. So the valuary high level is right here, and that's 433.93. So this price area here is where we saw the most volume. You can see here that's a 23.6% fib level. Now, are we going to pull back to that 23.6% fib level? Probably not. So where is the second most volume at? We can say it's around this 50% level right here. So that's my guess that we'll pull back. And what's the 50% level? It's about that 180-day moving average on the 4-hour though. So 4 hours showing us a little bit more data, a little bit more condensed, and that's what it's showing us, that of 180 it could potentially pull back to, which would be right around that previous resistance level. So most likely we'll pull back towards this previous level of support down here, this previous swing high. You know, we put in these little mini highs and things of that nature, but nothing too drastic. This is the big swing high, the biggest pullback that we've had right here at this level here. So I'm thinking that the market will pull back. We are in overbought area, overbought zone. So it could happen pretty soon. Now today the market is opening up. We pulled back quite a bit in the after. Let me expand this. And then let me get out my drawing tool and pull this up. Okay. So we pulled back quite a bit here in the aftermarkets. We opened up and it's looking strong, very close to 52-week highs. So it could get through it, you know. Some of the things that can happen here is that the S&P 500 can push higher. We can go higher above the overall, you know, market's 52-week high, or we could see some resistance. We could pull back that shrinkage of volume, and whatever supply is up there above could push the market down. Now there isn't a ton of supply, so, but at the same time there isn't a ton of demand, and so, you know, it's gonna take some sort of volume to get above this valuary high price level that we've got. Not only do we have the value high, but we have overall psychological resistance up above. That's my only problem with it. And so if it gets through, it gets through. But if not, you know, I'll be expecting that price to just move back down to that either the 61.8 or the 50. So that's what I'm looking at here on the S&P 500. Let's move on to the next stock. The next one I will be looking at is, where's it at? DIA. Okay, so this is the Dow Jones here. Let's go to the daily charts. So the Dow Jones already seeing a little pullback here. Dow Jones Industrial Average seeing a pullback right at the February high, seeing a pullback right at all-time highs. So that is already confirming to us that we got one indice now putting in weakness, confirming the weakness. Not terribly yet. Now it could just consolidate sideways, or this could be the only red day and it could pop right above the February high level and above, overhead resistance. It could do that. But we're still seeing that weakness beginning to confirm my overall, my overall thought process behind this. So let's see how we looked in the aftermarkets leading into the open here on this one. So we can see kind of the same thing as the S&P. It looks like it tried to gain some weakness, but that value high level just had, too much of an impact psychologically on it. And now we're seeing some of that weakness come in here. We already don't have a lot of demand. We already don't have, crazy volume towards the upside. And so you can see here on the value level, we got this gap in volume, this gap in volume and price. So we could easily be overrun by that and drop down here to, I believe, this level at 350.22 on the DIA. So if that happens, I'll be expecting the S&P to kind of follow that rhythm. It's a little slow to do it, but I believe that that's what could potentially happen. We could see a same drop like that. The S&P 500 and the DIA don't look that much different from each other. So that's kind of my assumption on that. I think that once this pulls back to this 350 area, what you can potentially do with that gap of missing volume here, there's nothing to support it up. And then the second highest level of volume here is right above that 350 level. Now that may hold it up. We may see some demand down there, some people on the bid stacked up to the point where we just bounce from there. So, or we could just consolidate sideways or go higher. It's just my assumption. It doesn't have to happen at all. Matter of fact, it may not happen. So just keeping an eye out on that, waiting for that confirmation. I'm waiting to see that if tomorrow opens up, what's tomorrow? Friday. If tomorrow opens up, we're seeing weakness still, that confirms it. If we see close below the low of high day, okay, that's confirming my overall assumption. That gives me the opportunity to maybe write some calls to go to buy some puts or something like that for the meanwhile, while we stay hedged against the upside, we stay hedged against the downside. Next one we're looking at is the Qs. So Q's still kind of far away from the overall high, 52-week high. Still kind of far away from its 52-week high. Not a lot of volume here, so it could just not really have any difficulty getting up to that level. But I don't believe that's going to happen if the market doesn't, if the other indices don't have that strength. I don't think the NASDAQ composite is going to have that strength as well. I think that it's going to do whatever the remaining sectors, the remaining indices are doing. And so, we got above this, this resistance level right here, which we could see that was a lot of volume there. We got above there. Now we're seeing little to no volume. So only two things can happen right now. We can continue to go higher, or this lack of volume. You see how little the volume is, and how this lack of volume. And then the red day that we have is kind of the most volume we've seen down here. You can see right here. At that time, that was some of the most volume in that market when it was a red day. So leading to me to believe that there's some sort of selling pressure up above in here. So two things, like I said, two things that could really happen, three things that could really happen. The first thing is the market could move higher, right? No, with no problem because there's no volume at any of these prices stopping it. No supply at any of these prices that's stopping it. Besides, the overhead resistance, which is psychological, or we can see some consolidation, some build up. We can already see there's a little bit of build up at this 373 price right here. There's just at this it's like 375 or 373 around there. It's just a tad bit of build up compared to what we have up here at these higher levels. There's not much of anything going on up here. So we can see a consolidation, maybe a build up before moving higher. Or we can see a pullback, and if we pull back down, I'm thinking we're going to pull back to maybe 368, 368.39. This previous area of resistance down below at this value level, because that is, one of the highest areas of price exchangement. I'm thinking we can get down there. So that's all my assumptions for those. The RUT. Let's look at the Russell 2000. The RUT. Let's go to RTY so we can see what the volume's looking like on this. So the RTY moving higher, almost at the value every high level, and it's looking like it's seeing some weakness as alongside the market showing us weakness. So still consolidating sideways for RUT. We could pull back here to the value very high level to that. I mean, the point of control, not the value very high, but the point of control we see clear as day. We could pull back there, bounce from there, or consolidate there. Or, we could any day now get above this 52-week high. I mean, not even 52 watt. We can see this thing get above this 9-month consolidation high. I'd like to see that for RUT. Is kind of why I'm getting excited for that. But I'd love to see that happen. This thing has been complacent for such a long time, but we've seen it before. It's nothing new. We've seen RUT do this before, and yeah, we've seen it do it before, but it will sooner or later get above those highs, and it's gonna be a nice one. So just keep my eye out on that one. I like to watch this. You can still play amazing option strategies on this iron condors, writing puts all day long, straddles all day long, butterflies all day long. You could really take over theta with this thing because it's very complacent and it doesn't seem to be moving anywhere. And so passive income is just what this is going to give you, and that's just about it. Not really anything in the directional unless you're going to just play off the support and resistance zones. So yeah, that's all I got for that one. Bonds though, let's take a look at bonds here. Bonds moving lower. We're right at about that value where we not bad. I keep saying value very low, value very high. But right at that point of control, excuse me, about right here, this price area here. And so interest rates, when those interest rates rise, we see the market, the bond market sell off. And when those interest rates uh, lower, we see the bond market make its way back towards the upside. So bonds slipping off, showing us that interest rates are the interest market is rising for whatever reason. We're seeing the point of control. It's arriving right to it. Last time we were right at the point of control. We can see that demand pushed it back higher, and we got that push higher in bonds. We're right back at the point of control. Something is wanting, is fighting against that resistance, fighting against that support, fighting against those buyers. They're pushing it back down. Now, got the point of control. If it it gets wiped out, and it pushes lower down to the very low level. We don't got anything under here. It could easily get down there, and we got some resistance levels down here, but it gets down there. We see interest rates go through the roof. If those interest rates rise, we're going to see the market start to tank. We're going to see the market start to sell off. So keeping your eye out on the bonds. Those things will tell you a lot about the overall structure of the market and how it's doing. As far as its interest rates, because that's what you want to be paying attention to when those interest rates, they do move the market, and the bonds will tell you beforehand what is going on with those interest rates. So that's all I got for the bonds. And the last thing that I'll be looking at is volatility here on the VIX. VIX still moving lower. VIX at 15.4 at some of the lowest levels here on the VIX level. We're right at these just about lows, the all-time lows 14.1. So and that still was a green candle because it shot right back up to 15. So seeing really low levels for the VIX. Looks like the volatility is being sucked out of the market. It won't be too long for volatility enters right back into the market. It's like a recycle cycle thing, and it doesn't fail to continue that cycle. So yeah, volatility is very low right now. It's great to see, but I like to prepare for what the worst could, what could really potentially the harm that can happen in times of good markets. So, when we're seeing the lovely la 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 markets, when there's nothing to worry about, I'm always looking, okay, how can we combat when the market is not looking like this anymore? How can we hedge ourselves against this turmoil that is bound to come? Because we've seen it multiple and multiple times before. Turmoil is always bound to come. So that's kind of what my technical analysis is raved around, is getting ready for the next pullback, next retracement, or anything of that nature. Because when markets are doing good, markets are going to be doing good. We're going to be making money. But what about when markets aren't doing good? You don't want to be caught off guard. So, that's kind of how I look at things. So that's all I got for you guys today. If you enjoyed this video, leave a like, comment, and subscribe. I make these videos so you guys can have informative information to make those money-making trades for yourselves. If you're seeing something that I do that you like, and you don't understand it, leave a comment and I'll make a video on it. If you see something that I like and you want to implement in your trade, by all means, you are free to do that. That's why I make these videos, so you guys can get a piece of my brain. So I'm going to leave this video up in the right hand corner. Click that video because I make these videos every single day, Monday through Friday. I don't miss a day. And so stay tuned for the next one, and I will see you all soon.